What's going on, guys? Welcome in. It's smarthelping.com live financial modeling here. We are going to finish up the car wash model today, maybe start on something new even. Um, don't forget to like the video, subscribe if you haven't, and most importantly, um, check out smarthelping.com for all your financial modeling needs. I've got over 100 templates here, different price ranges, but all very, very reasonable. Um, today, so the car wash model is part of the industry specific model category bundle. We've got about 50 or 60 in here, and we're currently in the process of upgrading all of the templates to include a formalized cap table and three statement financial model integration, monthly and annual. All the models already have an executive summary, distributions, 5-year monthly and annual, a discounted cash flow analysis, internal rate of return. So what we're doing is just enhancing the output summaries, as well as cleaning up some of the global control areas as you've seen. It's going really good. Um, every template's a little bit different, so it doesn't, the integration process is always a little different. It takes some are quicker than others. This one went pretty well. I nearly finished the whole thing on part one of the car wash integration. You can see that video. I think I put it in the link in the description. Also, let's do a quick sound check. Let me make sure I am being heard here. By the way, where I live, we got about 2 foot of snow. Is crazy. Test. Okay, sounds working. Um, so where we left off on this yesterday was, I believe we finished the balance sheet. We were all locked in. I updated the loan calculation logic so it works if the start date of the loan is some month in the future and not on if it's and not on the very first month. And then as you know, I also updated, I figured out the other, I've done 3 or 4 other upgrades here so far. And so there's a franchisor licensing. I updated that one with the same logic, so it had the same thing. I updated the and the website mobile app one with traffic conversion. So it's just a small issue where if you had some month other than the first month of the model or forecast as the start month of your debt, then you would just see a check here. It'd be whatever the amount is until it actually started, then it go back to zero. So it didn't really, it wasn't like a something that would affect returns or anything. It was just a check, just kind of like an annoyance because you want to see zeros here. So I just did that update on those two. The equipment rental one was already working fine. It had a little bit different debt logic. That's why. The 5-year SaaS was fine. And so that's all taken care of. So today, let's jump into what we're doing. And then, and just to give you a quick overview, we're going to update all the sanity checks, make sure those all work for all situations, and then, um, that'll be we'll be done. But before we get there, we got to update the rest of the global control outputs here, cap table. So let me just try to navigate to the last thing I did. We did on this template, the car wash model, we didn't update any of the base logic because it was really, really good and well done. And this was actually based on an update I did about a year ago with capacity and seasonality logic because a car wash is very likely going to be seasonal. So, I talked a lot about this on yesterday's stream, but it's great logic as it is. Didn't need any enhancements or anything. Let's see, did we update this? Yes, we did. This is all good. Remember, terminal value is where you're defining, and if you don't have any fixed assets and you just are assigning the entire exit proceeds to the, as taxable income, you just put 100% here. CapEx is good. Now, cap table, let's look at this. This needs some updates. And before we can do that, we got to make sure this is updated. So we added a distribution schedule, but let's see what this is. B36. Okay, so we just brought this up here. Funding from investors, so this would equal cap table, this total, and share of profits would be fully diluted ownership value, which is this. And then 7066 should be the remainder for insiders, 70 and 66. Perfect. Okay, so this looks good. It's actually a negative internal rate of return with the current structure, which again, these are just arbitrary assumptions. When you go in and build this, you clear out everything that's in light yellow and blue text and put in your own information. This is also where the discounted cash flow analysis is and net present value. Those are all working fine. And we got a little visualization over here. And also, I just wanted to make a quick note, just generally about all these is you don't have to take on debt if you're not planning to. You can always zero that out. And you don't have to take on investor funding. That can be, you can define your cap table as nothing for outside investors and then just have your owner operators with their equity share, and they'll have to obviously come up with any equity that's required if you're not getting it from investors or debt. But you don't have to have this. Does not have to be a joint venture or a situation where you're raising money through investors. It can be just a single operator trying to figure out how much money it's going to cost to start up and then what the possible returns look like in operations. So keep that in mind. And that's just generally across all the templates I build. So it's nice this logic is already in here. Great. Let's see. So cap table, we can update this. We want to remove this reference to the other workbook. And also, I'm not sure if, let's see, is C9 still the right row? Oh, yep, it is. Total distributions. Great. So once we get all this done, the big thing that is always going to take time and be difficult is the checks. And that's basically going to check if I reference everything properly or need to update something. Also, guys, feel free to talk in the chat. I updated it, I think, last week or 2 weeks ago. So as long as you're a free subscriber, you can talk in there. And you could give me, I mean, you can talk about anything really. Suggestions, try to point something out that I'm missing. When I sit here, sometimes I sit here for half an hour trying to figure out something that was really easy to figure out. It happens. So there's a lot of moving parts to these three statement models and just general modeling that's this complex off the shelf. Okay, so this is all matched up. That's good. Update our year reference. We can also make sure, so this is a little trick. If you're integrating different workbooks together, you always, when you're done, you always want to look for any references to .xls by the whole workbook and make sure it comes up as 0. Okay. Actually, yeah, it's going to be a couple here because I haven't updated this. But that's what I do at the very end because you will figure out if you still have bad references because you don't want any references to other workbooks, obviously. Let's see, investor proceeds. This is just a result of the cap table. Applied valuation is just the amount raised from investors divided by their share. Owner equity, same references but different area. On the cap table, take their total investment. That's fine. Total equity. That. All right. So we've cleaned up that. We have, make sure this is still all balanced through the whole thing. Oh, we got to update this. Balance sheet, annual. So on here, I'm just separated into the outsiders versus insiders. I'm not going to try to put all individuals and all investors separately on this. That's in the cap table if that needed to be seen. So this just equals first month here. Oh. Also, one update I did, I didn't talk about today, but I did it yesterday, was changing the length of the descriptions of these income statement, balance sheet, cash flow, annual, monthly tabs. So now they can fit in this nice compact area instead of taking up the entire row and making it difficult. Let's see. Now I always like to be consistent, so I'm gonna look at the other model and see what I did on the annual. Oh, and here you can see if we put this debt to somewhere in the future, it still balances. As you can see, there's now starting later. I always want to be consistent. So how did I do? So this just went over all the way, apparently. What do we do on the monthly? So this zeroed out. So hold on a second. What do we do? I know we tested all this, but what happens if this is 1 year earlier? Did I just have it flow to the end? The balance sheet. So it stops on the monthly. What about the annual? Ah, I put logic into the actual owner's equity to zero this out. So this goes to the end, but it's actually if the end year is further than the end year defined, or if the periodic year is greater than the end year, then the total equity zeroes out. Okay. makes sense. So this is just referenced across. And then which row did I hit with that? Retained earnings. I think I already did this logic though. Yep, that's all in there. All right, here. So we're tracking the year against C7, which is double check. C7 is the exit year, so that's good. The annual balance sheet always has a lot of problems. Wait, is it in here? Let's move it back a year. I actually might already have this in as well. Yep, okay, so that's already clearing out. That's fine then. Good. Let me get my chat up so I could see. Oh, we had a couple of viewers there at one time. Let me minimize this so I can see if anybody says anything. I can respond or. Okay, that should be enough to see. Um, where was I? So cap table, global control. This is all filled out now. Okay, we are on to the checks. Nope, 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 nope. We gotta update the executive summary because this definitely doesn't match. And then this is nice. So this is all referenced. Very good. So we need to do, what did we have? Let's see, debt service, investor funding. Investor funding we're going to take out because we check the general project cash flow before funding from investors or owners. Startup costs, loan proceeds. That's good. I'm really trying to get these things down to a science, so when I go to do it, you guys can just kind of see you'll see how the logic is working, but you don't have to sit here and watch me try to figure out formulas forever. And this was a pretty good one to see that I didn't have to do that too much on. And as we go forward, it'll get better and better when I get this down to a fine science. Now, there's going to be ones that are going to be hard, and it's just no helping it. Like the enterprise SaaS model, whenever I do that one, it's going to be a lot of customization and finessing. It'll be because we're going to do payables or receivables in there, or at least not payables. We'll do receivables on the contracts. What's another hard one with inventory? I'm trying to think. Well, there's definitely inventory. There's models with inventory in it. Oh, the manufacturing one. That's probably going to be the hardest to do. Anyway, all right, so loan payback. Looks like it's there. Just so I can see everything, let's put this exit to the last month of the last year. And so loan payback is now going into debt service, so we don't need to have that extra row because it's part of the amortization schedule. That's another efficiency we've done in these. Well, we don't have CapEx here, so we got to add CapEx, sale of fixed assets. just go to cash flow for that. What else are we missing here? Man, I love modeling. It's nice. You take your time. You're building real value. It's very satisfying when you solve a problem, especially like balancing a balance sheet that wasn't balanced. It's very satisfying. All right, so we did CapEx, sale of business, or sale of depreciable assets. Got that. Yep, that's in there. That cash dividends. We're not doing dividend stuff here. Taxes. I think that's it. Just add taxes. Okay, and now we simply resum this. So cash flow equals EBITDA, which is kind of your operations. Before is your cash generated by your operations or loss, minus debt service, plus this since it's a negative value, plus this, minus startup costs, plus exit proceeds, plus loan proceeds, plus taxes. It's a negative value. All right, cash position 3719. Let's just check here. Balance sheet 3719712. So that's good enough. Oh wait, 713. Oh, this is rounding. This isn't 1278. Okay, so that matches 12896. Yep, and then 143. Good. Um, well, so this is good. When the balance sheet annual cash flow matches the executive summary, that's a very good sign because this is pulling for the detail and we're all synced in. Now it's time for sanity checks. Probably one of the most important things you'll ever do in a financial model. Sanity checks are, I don't care how good you are, if you have a lot of stuff going on in your model, you need to have sanity checks to make sure everything works. And it's not even about accuracy, it's about logic too. Like if um you might not have hold on one sec. Just looking at the old Twitter. I was tweeting about franchise because I did a franchisor licensing model a couple weeks ago. It's actually the first model that I integrated the three-statement logic with. And when I was on stream, I was researching the success rate, which ended up being like, what was it, like 95% over the first 5 years. 95% of franchisees are still in business on average. Now, obviously, it probably varies by sector, but it was really high. And that's kind of a testament to the whole franchisor franchisee dynamic because franchisors are there to help franchisees succeed. And apparently that success rate is pretty high compared to just a general average startup. I mean, also the franchisee has a brand established, so There's a lot of factors into that. Your upside is probably limited, but you can scale. It's just it's different than like doing a startup, a tech startup, or some kind of startup that has just starting from zero with no branding or anything. So there's reasons that makes sense. While I'm at it here, before I forget, let me put in a link to more templates on this. Okay, so the first sanity check we're going to do, oh, let me get this back to set. We're doing annual net income versus monthly. So I think have that right here. This is this number. All these should always be 0.00. Balance sheet monthly. This is where we just sum up the entire row here. If there's anything out of order, we'll see it show up. And this makes it a lot easier to go, like, you don't have to check every single tab to see if there's any errors. You can just go right to the global control and look at it here and see what's going on if there is anything. And what I was in the middle of saying, it doesn't even, like, some of the checks, it doesn't matter. It's less about, it's more about sometimes what I've noticed is that when I'm out or I have a variance on the balance sheet or one of these other checks, it's mostly because of the timing. And to make this robust enough so that you can play with all these timing assumptions, you have to have proper logic, especially on the annual. So that's taken a lot of time to get right. Annual detail, check against monthly. So this is, I believe I put this in on the annual P&L detail at the bottom. I did not. So what it's going to do is check this number right here. And then let's go back over to that. And then this, let me make sure this is just, yep. So I should be able to just go this number, ending cash balance minus any monthly. And those should always be the same. Oh, we are out actually. So 2. And let me look at this logic. So this should, yeah, we'll see how this goes. Because I know when I adjust the timing, this looks like it'll just go all, like if the template stops here, it should just carry the balance to the end, which is good. And all the other checks on the balance sheet stuff are more complex. We have to do some index formulas and stuff to make sure it pulls the right information on different end months. All right, we're out by a little bit here. What is it? 78,893. What could that be? This can just be cash flow. Well, the easiest way is to go back. Let's look at start of period 0, 845 negative, 845 negative. Let's see, period 1 is negative 1576. Period 1, 1, 2, 3, 4. 1576. Check period 2 or 3 or 2. 186, 843. Yep. Next period 280, 349. Yep, that's good. Period 4, 293. And then it's got to be the final years, 2928, 391. 2928. Wait, what? Okay, is it just a formula thing? So this totals 1267. Oh shoot. Okay, that we're not checking that. Running cash flows down here. 1267,433. So that minus this should always match. I was doing the last year's total cash flow against the final month's cash flow, and the difference was just the other happenings in the prior in during that year. All right, so there's that check. That's in J74. So this annual diesel check is monthly J94. Now this is the hard one, the balance sheet check. So we'll go back. And also I messed that reference up. J74, not 94. What did I put? 74, not 94. Okay, so let's see what I did for this check, because I know it was more complicated and I don't want to have to think. It's the beauty of templates. So this was monthly annual detail against balance sheet. So if the monthly and annual detail match, and then the annual and balance sheet match, that means that the monthly also matches the balance sheet. Yeah, I knew this was some more. So what we're doing is taking the balance on the end month, checking it against end month on the annual cash flow in the annual, and then subtracting equity because it doesn't include equity in the annual detail. So this should be the same thing, but I just need to adjust the references. So balance sheet, yeah, hold on. So this is actually called something else. 5-year annual P&L. And then here, index balance sheet 11. Let's check terminal value. Or hold on, let's just go to the annual. So 11 is a cash, that's good. Terminal value D4. The year, yep, that's right. Balance sheet annual minus. Okay, this one's different, and this one's different. So this is equity, total equity, which will be that number. And then this has to be the total cash flow on the month or annual detail, which is this figure here. Got an NA. So what happened? 11 is the right row. D4 is the year, and balance sheet row 4 is not seen. So year C5. All right, now we should be good to go. Perfect. 0. Executive summary to annual detail cash. We'll put that right next to here. So what that means is this minus annual detail cash here. All right. And we're not getting too excited because I know we start changing some things up in assumptions. That's when the real test comes in. All right, distributions to annual ending cash flow. What did we do on this one? Distributions row 9, which is all the positive distribution or all the net periodic distributions. And then this is going to be minus here. Oh, what are we missing? Oh, right. This has a different tab name. Five-year annual P&L. Okay, that's off by the any balance. So, because this is not 349 rows long, it's just rate 74. Perfect. Final one, individual distribution check against total distributions. And this is just summing up that whole check area on there. N57 to R59. And 57 R59. Yep, that's that whole area. All right. Here we go now. This is the moment of truth. If all these checks are 0, we are done with the model and it's all set. So first of all, make sure if you change the launch year, you go in and update all of the different drop downs, which would be in, actually, I guess just the debt schedule would have to be updated, and CapEx, these dates, if you move the year up or down or whatever, and then these need to correspond. But that's just part of filling out the template with your own information. Okay, so let's start by changing. So let's do the end, the last month of the last year the forecast can go, and we're gonna try and, so we know it's all 0 when that's marked as yes. Let's check no. Oh my goodness. The first one we have it, we're out. The first freaking one. Okay. Here we go. So balance sheet annual. What are we out? It's just a timing thing. Like we gotta stop one of these. All right. 16825. That's just this balance here, and I thought I had this correct. So total. Let's total non-current assets. Let's pull up here because I know I've done all this work already. Balance sheet annual. Yep. So this one was actually much more simplified than we had before. And what I'm going to do going forward is I'm just going to use the most recent, like I'm doing here. I'll just use the most recent to propel these more advanced formulas because it's going to be different on each one, but at least I know the section is the same, so I can just go there. And now this should go all the way across. There we go. Now we're not out. Man, that's a tricky one. Always the annual is the tricky one with the timing changes. All right, so now we're good. The rest of the stuff matches that no. Let's try if we have a 0x multiple. Great, that's good. These all just end up being 0. Perfect. That's nice. Good flow there. Let's check. Okay. So all those checks worked. Let's check a mid. For whatever reason, you end the model halfway through. Yep, we are real down bad there. Okay, so the annual net income versus monthly is actually off. So I haven't seen that one that much. Oh, it's just a tax thing. I remember this did happen in the other one too. So let's go to our tax calculation on the income statement monthly. So this little front part here is all we needed. And the rest, income statement 55. Yeah, I don't think I've changed the position of anything. Just the tax references. And actually, I'd rather, if I could avoid, is this basically the same thing but without the front part? Sum ifs, 55, 50. Let me check. No, this is summing up 95, so I'd have to adjust more stuff. So what I'll do is actually just manually update this to say, we don't need this, if our month here is greater than the end month, then 0. That's all we need. Otherwise, do your thing. Okay, and then this should match our annual amount, which is 38,176. It does not, because why doesn't it? It's doing this right. See 30, 31. That's the tax rows. Yep, 30, 31. So what could it be? I do not know. We're gonna have to think about this a bit. What's our taxable income for the period? 202. Okay, so that number's right. 202. But why is this 44? Did I not sum up all of year 5? Oh, 44, 539. So that matches, but we're still out 1757. Which is what? Why would that be out 1757? Let's go. So this is 157,912. I just want to see what year that. Okay, so it's off in the final year, so I know it's in the last 5 or 6 months. This is the same, and this is the same. Uh, Is the debt service stopping? No. Okay, so we got to add this here too. So this is just another one. If our month is greater than our end month, this should always be 0 because it's over. I remember doing this on the last one. But it's harder, there's so much stuff going on, it's hard to remember all the stuff. So that's why the checks are in place to make figuring out if we have accurate information easier. All right, we're getting closer. So partial year of the last year. Hold on, balance sheet. What's the balance sheet doing? Balance sheet annual is also so when the balance sheet monthly is 0 variance, but the balance sheet annual has a variance, I know it's something with the timing, and that means it's the final year. It's 274. What is that? Looks like accumulated depreciation. All right, we'll go over. I know I dealt with this before. Let's go to the balance sheet annual on our previous version. Accumulated depreciation. We should be able to copy this in. Yeah, this needs to be more complex. So we go here, but we got to make sure it's D4 index balance sheet 34 on the monthly. Balance sheet 34. Make sure it's still the same row. Yep, accumulated depreciation, so that's fine. Match global control C6. That's the end month with the monthly row 5. Yep, that's still the same. Otherwise, index 34. All right, this should be it. There you have it. And now we're at a 0 balance. That was the difference, that 274. Okay, good. Now we're at all zeros on this check. Now we'll also, so I've done updates now. I'm gonna have to go back and redo the first checks as well, but we'll do that afterwards. It's just how it goes. You gotta check everything. If you change anything, you gotta recheck everything, because you could change something that messed up something that previously was fine. So, and I'm doing this so that when somebody buys a template, they don't have to go through and trying to figure all this stuff out. It already just works. All right, so let's go to the last month of the second to last year. Okay, good. Let's add a terminal value in here. Dang it. Balance sheet. Both the balance sheets are off. So why is that? Let's see. What's it out by? 565. Let's see. Debt gets paid back. This is zeroed out. 565. And in this scenario, we're doing a 0 multiple. Oh, but we are doing a terminal value. So here's, if you ever put yes here, you would not have a 0 in the multiple, because the terminal value is based on the multiple. So this is not logical. You would just put no in this case, and then you can see these match. So if this is a yes, this should be some number. And then we're balanced, because now you've got your values coming in here. And the balance sheet now is all good, because that's flowing through. That has something, see, the retained earnings value was about what we were out by. That is because it's not logical to include exit proceeds, but then not put a multiple. It's just no, that situation would never happen. It's because it's not logical. Alrighty, so that We're good there on yes. And if we put no, then you would obviously zero this out. And that works. Now let's go to the partial end month of within year 4. Okay. If we hit yes here, put a value in. We're good. Okay. We're almost there. Let's go to let's go to back to the final or the first ones we did with see if it works with the update. So if I put yes there, yep, all checked. If I put no here, good. And if I also zero this out, good. And then also the mid of the last year, 0. Try yes. Oh, and it's not logical. You can't have yes and have a blank here. Okay, good. If box, if include terminal value row is marked as yes, this can't be 0. Just so you guys can see. All right. I mean, that's it. We are good to go. Everything's flowing great. I don't think there's any other assumptions we really need to test. I think we're good to go. I think we are good to go. Just looking over a couple things. Yep, this looks good. This looks good. Let's set this back to the end month of the final year. That's fine. Alrighty. Car wash model done, and it only took, what, all of last stream and 50 minutes of this stream, so roughly 3 hours. That's not bad. I'm going to add is an index page, and then I will also do overview video that's not this long, just like a 10-minute one that just goes through each piece to make it easier for people to see without having to watch like an entire live stream if they don't want to. So with that, I will call it a day. Hope you guys have a good Tuesday. Don't forget to check out smarthelping.com for all your financial modeling needs and templates. We've got stuff for all kinds of industries, for accounting tools, startup models, joint venture cash flow distributions, customer tracking, CRM stuff, and it's smarthelping.com. Don't forget to subscribe if you haven't, like the video, and don't be shy in the chat if you got something to say or want to talk. I will respond to you while I'm doing this. Alrighty. See ya on. Oh, tomorrow. Oh, let's go real quick. So for tomorrow, the one we're updating. So we've done SaaS, equipment rental, web app, traffic conversion model, and now we've done car wash. The next startup model will be product as a service. We'll start that tomorrow. And then, oh, and I've also done this whole integration for the franchisor licensing template as well. This was just the last new model I did. And since I was on, I just did the integration for that. And then moved on to the starting from the most popular and going down. So we've now got how many? 1, 2, 3, 4, 5, and then also the lending model has a 3-statement integration. General lending business, this one. So it's at 6. We've got about 55 more to go or so for starter models. All right,